This topic, balance scorecard, is already at the last part of our study guide. However, I am making use of volume number 1. I mean, book number 1. So, maubos sa gid-anay dire ang tanan nga chapters before we proceed to book number 2. Actually, gamiton ko man gyapon ang book number 2 for amo ni ang balance scorecard. But unahon ko anay di ang book number 1. So by Thursday, I'm going to use book number 2 to continue with balance scorecard. Now, for the meantime, we are going to take up the last chapter of Vanderbeek. The last chapter of Vanderbeek nga may amo ni nga topics, learning objectives, perform job order costing for service businesses, prepare budgets for your service businesses, apply activity-based costing for a service firm, compare the results of cost allocations under simplified costing and activity-based costing. Prepare a balanced scorecard, amo gini ang aton nga main topic, and determine the cost of quality. Okay, so here we have an example of an engagement account. The engagement type is audit, date contracted, date completed. This is true for service-oriented business using job order. So, an example of this is if you have your accounting firms, kalapoy, hindi, kung mag-record ka, kung mag-connecting siya, meaning, utod-utod tong record mo eh.
Hindi pa sa diretso lang.
Saan
Ma-pause lang sa din mo diretso lang.
Madito mo lang, sa Perta, Bremen. Okay, so we have now your in the job order cost sheet, you will notice that there are 3 groups of persons signing the engagement account or involved. First, we have the supervising partner. Actually, the supervising partner has a limited number of hours. However, the rate per hour is the highest. Now, he will only review the work of the manager. So the manager is paid a little bit or 1/2 of the rate of the partner, however, higher than the rate of the staff. So ang mga staff, these are the junior and the senior staff members who are paid $75 an hour. However, they will render more time because sila gid ang nagaubra sang a bigger portion of the work. So now we have the cost performance report for one client. Now the client is Superior Automotive Incorporated, and the one doing the audit will now prepare a performance report in connection with the actual expenses incurred compared with the budget. So this involves an unfavorable variance because the actual exceeds the budget. So the revenue budget is starting point for the annual budget. That's for the service business. Sa aton nga manufacturing kag merchandising, of course, the cornerstone of the budgeting process is the sales budget. Okay, so the billing rates reflect the firm's best estimate of what it will charge clients for the various categories of professional labor in the coming year. So we have now the overhead budget. This is the budget of the accounting firm or the service firm. The budget good for the whole year, including the direct expenses. So we have now the budgeting. Service businesses must prepare an overhead budget that includes all of the expense items that cannot be traced directly to jobs. So meaning the indirect cost. Overhead consists of the indirect expenses incurred to support the activities of a professional firm. So we have now the name of the accounting firm showing the revenues and the operating cost and the operating income in the budgeted income statement. Now, for activity-based costing, meaning the cost will be computed based on the various activities in now comparing the activity-based costing with the traditional system. So we have now the diagram of the activity-based costing. Three of these costs are considered to be non-traceable. Therefore, they are to be allocated. They are the common cost. While the four costs, including partners' wages, managers' wages, staff wages, and other direct costs, are all traceable, or we have the direct cost. So we have now using activity-based costing. And for a law firm, we have now the simplified costing as against the activities. So labor, and we have now your professional labor cost and support. So we have now the total for Chow and Patel. Now we have the it should be a cost benefit decision when determining whether to implement a more sophisticated system. And thus the benefit received from the more refined information exceeded the cost of implementing and maintaining the more sophisticated system. So that's it means that the question is, does the benefit exceed the cost? So we have now the balance scorecard. Actually, companies often use non-financial performance measures to evaluate operations. So in a balance scorecard, we do not only rely on financial performance measures that will answer the question, how well have you performed financially? But you have to focus on customer performance measures, how well we are servicing our customers, and internal business process performance measures, how well our key business process are working, and learning and growth performance measures, how well do are we doing in training our employees and developing new product and services. Now tomorrow I will continue with the reports or with the things to discuss as taken from the second book, the book of we have Hansen and Mowen. Now determine the cause of quality to components of quality. Design quality indicates the degree to which a product or service satisfies customer needs. Conformance quality measures how well the product or service performs relative to its intended design. Now, shall we go to the exercises at the back of chapter 9? By the way, we are taking chapter 9 with focus on balance scorecard. However, we have other uh, miscellaneous items based on our objectives. Now, the balance scorecard is also found in the book of Howen and Hansen and Mauen. It's still in chapter 9. We are going to continue with that on Thursday. Okay, now if you have noticed, if you already have the second book, many of the chapters we have already discussed, including budgeting. We have discussed that in chapter 7 of Vanderbeck. And then chapter 10, we have a lot of topics, including cost, volume, profit, analysis, segment reporting, variable and absorption costing, and differential costing. Some of these are also in the book of Hansen and Mowen. So will you now refer to exercise 9-1, we are going to discuss this problems in okay. Okay, 9-1, computing budgeted overhead rates. James and Waymar have professional service firm that has the following budgeted cost for the current year. So we have now service firm. Compute the budgeted overhead rate for the coming year using direct labor dollars as the overhead allocation base. So we have now your expenses and cost, associate salaries, depreciation of equipment, friends benefits, lease expense, partners salaries, telephone and tax and fax. So we have now the budgeted overhead, including the depreciation of equipment, the friends benefits, the lease expense, and we have the telephone and fax for a total of 450,000. The budgeted direct labor includes associates' salaries and partner salaries. In other words, they have the direct labor cost. And don't forget that we are dealing with service-oriented firms. So the budgeted overhead rate is 450,000 divided by direct labor. Stated, compute the budgeted overhead rate for the coming year using direct labor dollars as the overhead allocation base. So we are now dividing using the denominator, meaning the overhead rate is 90% of direct labor dollars. Okay, we now go to E9-2, computing profit or loss on a bid. Sebastian and Whitley plumbers successfully bid $30,000 for the plumbing work on a new luxury home. Total direct labor cost of the job was $9,500. Other direct costs were $2,500 and overhead is charged to jobs at 150% of direct labor cost. Question number 1. Compute the profit or loss on the job in $8 and B as a percentage of the bid price. So we have now the job cost, but we are now computing for the profit or loss in dollars and as percentage of the bid price. So we have now the job cost for direct labor in the amount of 9,500 for direct labor, and then for other direct costs, 150% of direct labor cost of here 14,250. So the total is 26,250. Now these figures are given except for the overhead that we can determine by using 150% based on direct labor cost. So computing now for the profit or loss in dollars, if you had the bid price equal to $30,000 and then we deduct the job cost, then the difference is the profit. That's the answer to letter A. And the percentage of the bid price, we have 9,500 direct labor and factory overhead here of 14,250, and we divide it by 26,250. So we have as we have to compute the profit or loss on the job as a percentage of the bid price. So we have now in number 2, we are computing for percentage of 90.5%, meaning the labor cost and overhead cost is 90% of the total bid price. Now we go to number 3, preparing a revenue budget. Clean and sack CPAs. budgeted for the following professional labor hours for the coming year. Partners 4,000, managers 10,000, and staff 25,000. Budgeted billing rates are partners 250 per hour, managers 120, and staff accountants 80 per year. Now we are given the professional labor hours for estimated for the coming year. So now prepare a revenue budget. So for the number of hours multiplied by the billing rate, we have the total revenue. So that gives us the total revenue of 4,200,000. Okay, now we go to E9-4, preparing a budgeted income statement. Prepare a budgeted income statement for the month ending September 30, 2016. So we have now the patient revenue 58,500. Then we deduct the operating cost, physician salaries for 28,000, nursing wages for 1,500, friends benefits 3,300, lease expense for 2,500. Then we have 2,200 for administrative support and 1,850 depreciation of the equipment and utilities equal to 650. Now the problem is asking for a budgeted income statement. So we have now the operating income of 15,500. Next, we go to E9-5, preparing a budgeted income statement for the month ending March 31, 2016. So we have now Lopez and Tisnado Dentist. We have now budgeted income statement.